Hey, thanks for tuning in. In this video, I'm going to discuss some past performances for Q2 and the start of Q3. Just wrapping up some trades, show you guys, in the rear view mirror what some things were that I could have done better, some things we could have done worse, and just the why behind some of these buy sells reviewed. So started off with QQQ. This was definitely a home run trade. We had this, ABC structure here into simple moving average 100, a reset of PPO to the zero line. We had at this point a daily reversal candle. As you can see, I think I was even a day early here. We didn't even have the buy signal yet, which could have ultimately come right here when the PPO held a bullish configuration and started to rise towards zero. But again, I'm generally a little aggressive with my entries on ETFs, and I sometimes I'll be a day or two early, and I'm just okay with that. In this instance, the sell was very, very simple. We were looking for a double top, best case scenario, cup and handle continuation. Worst case scenario would be come all the way back down and set a higher low relative to the 309, which is what ended up playing out. Sold half of my position up here, got the PPO bearish cross confirmation, added back down here for the higher low, gap fill play. Was pretty generic. Like, my risk would be right here. So buying here, even though we don't have a reversal yet, was okay. And then ultimately, this was a very easy trend to ride, right? Above the 5, above the 10 the whole time. One bear trap here, close below the 10, but really back test to the 20, and then rode the 10 the whole time. I did sell the rest of this position here. I sold 50% on this day and then stopped out the very next day, closing below the 10. When you have a bearish divergence, a higher high in price, a lower high in momentum, it's sometimes that's all you need, right? You've got the PPO cross, right? So let's just say you're a moving average trader. A loss of the 10, a loss of the 5 is a clue. We haven't lost the 20 yet, so I certainly was aggressive, exiting 100% of my position. But I did want to come in this week very, very light. I didn't like the way most of these indexes closed, and I wanted to have the ability to have zero capital at risk. But just reviewing in hindsight here, the buy-sell signals that were used, I would say so far have been very good. And I'm looking for a visit of the 50 to add back, right? And I'm playing this via TQQ. You don't want to, the leveraged ETFs, you don't want to hold them on the way down, because when QQQ drops, 6%, 8%, TQQ drops 20, 30%. And wrapping up this trade, this was a 65% gain on on TQQQ for a 2.5-3 month hold. And compounded twice. So that's the QQQ trade. The Twitter trade, I was a buyer here a little bit early. Got the real buy signal right here. Capture the 200, capture the 5, capture the 10, and held on a back test. PPO cross, bullish momentum. This was a very easy trend to ride as well. Started to get a little bit dicey up here. Got the sell signal here. Unfortunately, I did not exit that day. I'm still holding 100% of this position. There is an ER on 722, and I will be exiting 50% of this position before the earnings, somewhere here in this $65 to $70 range, locking in a 25% gain. What we do have here is a PPO bearish cross, PPO divergence, right? A high and then a lower high. High, lower high, even though price set a higher high, momentum set a lower high, a loss of the 20, and we're about to get the 10 crossing below the 20. So you're going to get a bunch of sell signals. and then the earnings are going to come, and it's going to make this thing, look real crazy. And quite frankly, the symmetry of the trade, right? This setup here, this bear trap here, could easily look symmetrical here for this bull trap, and that's what we're trying to. That's what we were trying to trade this whole time. We've gotten the move. You got to get paid. You got to take profit. Looking at ARK, this one was played very, very well. Buy here, confirm here, PPO confirm, sell signal. Again, I'm 5 days before the buy signal comes in. So I am early often. I understand that. But again, early buying an ETF is, while it is aggressive, it's less risky than early on a stock. Got the cross here, got the bullish divergence, got the breakout. I did sell here on a rejection of the 200, even though I did not have the PPO bearish cross. That aggressive exit was not rewarded. We then did get the sell signal here, a loss of the 10, rejection at the 10, PPO bearish cross. I exited the rest of the position there. So this one, certainly in hindsight, could have played a little bit better, not taking profit at the 200 because we didn't have the bearish signal in momentum. In fact, this is a very bullish posture, and as you can see, it maintained higher prices for quite some time. Airbnb is definitely a trade that, in hindsight, what I think I made a couple percent, but the mental capital was simply just not worth it. Again, real early in the trade, right? Entered here, got the buy signal here, right? And I think you made 8% on this trade, even if you nailed the top after getting the buy signal. So really no momentum on this move, no bounce. This isn't the bounce. This is not the move that you're looking for. And in fact, exited the rest of my position here, PPO rejection at the 0 line, which is a very bearish look. And as you can see in the histogram and the distance between the blue and the red, that, the bear momentum is increasing and intensifying, and obviously something to avoid. And this is, this inverted cup, you get a little bounce here, and this thing could be good night Irene. Also could just be coming down to break this low, see what liquidity is there, and reverse. So this one's actually on the list again. At some point, this will wake up. We just want to keep an eye on from where, and the fundamental story is definitely there. I just think the valuation's too high, and that's why this thing continues to sell off. But when she bottoms, I'll be there, ready to participate. TLRY, another example where we could have done better. But with these memes, I tend to just size small, right? 5-10% max of total portfolio, and just get a good entry and let the trade work. Bought at the 200 with a bullish divergence, bullish PPO cross, right? Rejection here at the 100. Didn't get the sell signal till here when she lost the 10, and confirmation here when she lost the 20, and I ended up getting stopped out here below the 50. Right, so I think I made 10% on the trade, but the mental capital was awful. I could have exited here at 17, and in hindsight, that's what should have happened. An obvious rejection at the 100. This then created the top of the channel, and now you have a clear, obvious descending channel below the 50. There's no reason to participate in the stock, even though you do have a bullish divergence. You need to see either 1341 hold in reverse, or attack of this bottom trend line, or a breakout. XONE, this was a great trade. Come down here with the double bottom setup. I was a little early here again, buying, and then buying again, adding to the position when she broke out and got the PPO bullish cross, capture of the 10. First sell up here at the gap, made perfect sense with the doji. Again, early on my exit, early on my entry. Sometimes I need to just listen to the signals as well. But in hindsight, right, selling at 58, 60 bucks was not a bad sell. This is when I exited the trade entirely, up here on this red week when we closed below the 5, with the PPO bearish divergence, right? 1, 2, 3 highs, 3 lower lows in momentum, and then your bearish cross. That's kind of a kiss of death. So I'm now avoiding waiting for PPO to reset to the 0 line and get closer to the 40, where my risk will be a lot better defined. ENPH was a great trade. I think could have exited a little bit more up here, but that's fine in hindsight. Got the buy signal here. I think we had some fibs, right? I think this was at a 618 extension of wave AB, so it gave me even better risk reward. Got the reversal here, got the buy signal here. PPO cross bullish, capture of the 10, right? Time to buy. And as soon as you did that, she went right to the 50 and put in the next consolidation. But as you can see, never put in a bearish cross, never got rejected at the 0 line, setting up gap fill, SMA 20 retest buy when the PPO is like this, above the 0 and in a bullish configuration. The odds of getting demand at a rising 20 are actually greater than 50%. And so that sets up this high probability trade that led to this wave 3. I'm thinking this is some wave 4 into a confluence of demand. As long as she holds this 146 high, this is definitely a wave 4 setup. So the closer we get to this level and these moving averages, the better the risk reward gets for this trade. And ideally, she gets back to the 0 line and then curls back up. So still very early, don't have a buy signal yet. We got the last sell signal. We did exit up here. We did sell up here at the 50, even though we didn't have the PPO bearish cross to confirm like we did on Airbnb. As you can see, getting rejected at the 0 line is definitely a possibility. So taking some off is wise, even though you didn't have the bearish cross. But in hindsight, you could have said, look, until we get this bearish cross and a rejection at the 0 line, we're not going to do anything. And that would have been rewarded. Simply accumulate here, and then distribute up here where we knew there was lots of supply. The 190 to 170 supply level was called out weeks in advance and was certainly an area where we were liquidating positions. NVDA got the buy signal here, higher low at the 200, great risk reward, sell signal really given here. And as you can see, since the sell signal was given, she's liquidated about 10% in 5 sessions. So, these buy-sell signals work. It's best to just follow the system. You don't need to guess. NVIDIA is a great example of that. ENPH is a great example of that. This is a great example, too, because of the bullish divergence and the higher highs in momentum each time. So even here is another higher high. So it makes this dip a high probability swing trade entry for setting another all-time high. So regardless if the all-time high sets a higher momentum or not, you anticipate another all-time high coming because this momentum is higher than this momentum. And I do believe that this is a wave 3 of 3 of 5 high. And we're in wave 4 of wave 4 of 3 of 5. And I think this one will continue to provide a lot of opportunities. So keep an eye on NVIDIA this week. CGC, and this is the last one where we had another great trade. Certainly could have done better on exiting the remainder 50%, but we got the buy signal back here. PPO bullish cross at a fib. I think this was a 68% retrace of this and 618 of that. ABC. The bullish reversal candle, capture of all the moving averages, and the PPO cross was everything you need to know that every dip from here on out would have been worth buying until you got the bearish sell signal. Loss of SMA 10, PPO bearish cross indicating reset to 0 line is required. The reset to 0 came back here, but you then got a rejection at the 40 and the 200. And then a loss of the 100 and the 10 again. So right here was your week that you there's no reason to be in this trade anymore. Again, we'll wait for the next buy signal to be triggered. I think it's going to happen around 1832 in this blue trend line in the coming weeks. And I do think this will be another great swing trading setup. You don't need to nail the low. It's okay if you had bought right here at $19 because she was going to 50. You didn't need to nail the low at 14. It's not a big deal. And even if you just use these basic buy-sell signals with candlestick confirmation and volume, like this high with this volume, this candlestick with this volume, with this indicator, with this Elliott wave structure, and these moving averages, you tend to get a high probability win. So yeah, that's it for this video. I hope you like the content. If you do, please like the video, subscribe, and come check us out on Twitter. Thanks.